Hello, traders. Gary Wagner with thegoldforecast.com and WFGForex.com, bringing you your daily market update for gold, both Forex and COMEX. It is the 22nd day of the month. It's Sunday here in Honolulu, Hawaii. First day of the week, Monday in Australia, and this is the Daily Report. Gold, Forex, which is the only market open, currently trading under a little bit of pressure, 1226.15. For those of you who recall, on Friday we did issue a recommendation to enter the market from the short side. Traders who took that trade got in anywhere between 1227 and 1228. Our stops are currently at 1240. We will talk about this trade. We will talk about potential targets that I'm looking at and talk about the fact as to whether or not we think there will be follow through and we have actually entered this corrective C wave, all on today's report. Traders, Forex Gold is currently trading off about $2, 122.619. It is trading. It's actually been pretty active this morning. If you recall, we were taking a look at the fact that we had our B wave here. Of course, that's after our first corrective A wave came down here. And we were looking at different Fibonacci levels that would really tell us where, in fact, we thought this market was going to take us. So the first thing that I want to do is take a look at our Fibonacci retracement. This is from our top of A down to the beginning of our B wave, and then I'm going to carry that over. And let's line that up. And as you can see, we had a top, that this 1238 top that really came close to, and that gave us our first indication that we had a real good sense or a possibility for the end. It did go through the 61% retracement level, but at 78% we hit that top and we had a really strong indication. The next thing that I saw that I was really excited about, and I'll show you why in a second, was this shooting star. The shooting star has appeared at many times up at the top of the market. Let me show you what I mean by that. I've gone ahead and I've pulled up what I call my main page. My main page is what I use to chart different patterns that I see and ultimately different retracement levels, and kind of keep a running textbook or a notepad, let's say, of the activity in gold. And what I want you to take a look at that I find quite interesting is the fact that when we look at these shooting stars, we can see that there's been quite a few occurrences at the top of the market. So not only do we see this one right here, but if you look, we had this shooting star here, the top here, and of course this top here. So the shooting star has been a pretty prevalent market indicator. Now, the second pattern that I've seen appear quite frequently within the marketplace itself are these engulfing bearishes. So the next thing we want to take a look at is the fact that we did get not only a shooting star, but it was also an engulfing bearish here. We received it on the top of wave 5 here, the top of wave 3. And so it's been pretty prevalent through this area. And then, of course, I've got a whole other slew of them. You've got it right here in one, and you also have it as the market came down on our C wave. Now, the reason that I'm bringing it up is because when we took a look at Friday's activity, not only did we get the market go to this 76% retracement kind of stall, not only did we get a shooting star, but if you notice, we got an engulfing bearish. In other words, this shooting star was engulfed by the prior trading candle, and this would have been Friday's activity. What I had mentioned is for us to feel very comfortable, you would want a confirming candle. Now, a confirming candle is going to look something like this, and then we would see the market begin to trade lower. That's kind of what we would be looking at in a typical correction. We are just at the top of this, so it's a little bit too early to kind of say, okay, we did catch the top. But I can tell you this, traders, I feel fairly comfortable right now because of the alignment of all of these factors, meaning our Elliott wave, B wave, has really come up to that top 75%, and that's typically the top of where it's going to come to, first of all. Our Fibonacci retracement matches, our Elliott wave matches in terms of our wave count. In terms of our candlestick patterns, we're seeing two very, very strong candles that typically, when found at this point in the market, do indicate an interim top. And so that I do feel comfortable in terms of what we're looking at and the short that we did initiate on Friday. So as the market trades, we're currently absolutely not out of the water yet. You can see it's currently 1227.98 around 1228. It is a small bodied red candle, but as I say, it's pretty quiet. We want to see a candle that looks something like this. In other words, a black candle. Now, in terms of where we think, if in fact we're correct and we do get our retracement, where do we think that that retracement is going to take us? So for that, what I really want to do is take a look at our Fibonacci retracement of this last wave, and this of course is our up B wave. Let me put it on the board for us here, people. So you see that I've put up our Fibonacci retracement, and of course this is of the B wave, and I've put up what I consider to be the critical areas, which is the 23, 38, and 50% retracement levels off of our B wave here. And first of all, we're certainly not out of the water yet. The market's got to begin to come down. But if in fact we have found our top, and this is basis this 3-day pattern here, the shooting star that gets engulfed, an engulfing bearish, and a variation off a three-river evening star. If we do get follow through, what I'm going to look for is to see how it reacts at about 1218. 1218 is going to be the first area that I feel is going to be some sort of support. And the next level is going to be about 1206. 1206, that 38% level, because I am so fundamentally bullish, is an area that I'm going to watch very, very closely. I could definitely be wrong. We're going to need to see what kind of activity we find here. But I think that somewhere around 1200, there's actually a substantial chance of us finding support. And that's, of course, if we do, in fact, get this retracement that we're looking for here, and the market does begin to move lower. We're certainly not there yet. We do need to see confirmation today and mostly tomorrow. What's going to happen is we're only open right now in Australia. It will travel around the world, open up in Asia later on, then in London, and then into New York. And that's really where we're going to see how this market wants to trade and where this market wants to trade at. Of course, the next and final level that I want to look at is about 1197, and that of course is our 50% retracement right in here. One thing that we do need to note, though, is that there is some really strong support at this level that it's currently trading at around 1223, and let me show that to you, traders. And the support that I'm talking about is, if we take a look right here, and this is of course the record top that we hit. This is back in December of 2009 right here. And if we carry that over, you'll notice that that's predominantly where the market is trading at. And because of that, I think that that might indicate some fairly strong support. So we're going to have to see where the market trades. Of course, on a Sunday, it's typically the most quiet day of the week, but we're going to want to see if we do get follow through in this area. I can tell you this, traders, I believe it's going to be a most interesting week in the gold market. I think that one thing that we probably won't see is flat or stagnant activity. It's going to either want to try and retrace and have this final correction. If not, I feel that bullish sentiment will come into the market. But my bet right now is on the belief that we have, in fact, entered a corrective stage. We'll just have to see. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading. We'll talk to you tomorrow on Monday. Bye-bye.